guys, with their talk. Not realizing that my mic is muted. Great evening, everyone. Welcome back to my channel. You know, it's your girl Ancelena Versatility, boy, the versatile one. The channel where you get a little bit of this and a little bit of that. Guys, it is another Tuesday evening of our Let's Start program. And this evening, our topic is Insure to Ensure. You're in for a treat this evening. So I want everybody to just join early and just stay tuned. It is an interesting topic, and I am looking forward to seeing you here. I'm looking forward to seeing you exploding the chat, just asking your questions and making your comments this evening. All right? Okay. I see one person watching. Welcome. Welcome, guys. Who goes there? Please just say hi so I can recognize you this evening. Just waiting on some more person to join and also my presenter for this evening, and we will get the show on the way. Guys, I am back. My internet just went a while ago. Oh my god. Welcome, Sister Nas. Welcome, Mrs. Davis. Okay, guys, let me say welcome once more. Our presenter is on. You're not seeing her on the platform with me as yet. She will join me in the next 2 minutes and then we will get the show on the road. All right, so stay tuned. Okay, guys, welcome. So while I wait for my presenter to join me here on the platform, can we do a little chit chat as we wait for her? So, guys, based on our topic this evening, What do you think we will be talking about? Insure to ensure. What do you think our discussion or our presentation will be about this evening? Don't let me talk to myself now, please. You may send your response in the comment section there, the live chat area. What do you think our topic will be on, or our discussion will be on this evening based on our topic? Insure to ensure. Insurance policy, Miss Davis said insurance policy. Just insurance policy alone. Anything else? Anybody else? Oh, you like the topic. Okay, wonderful. I'm happy you like the topic. Nobody else wants to share? Life and healthcare policy. Okay. Only Mrs. Davis talking to me this evening. Nobody else wants to share? Get insurance, the insure coverage. All right. Welcome, Deaconess. Anyone else? Mrs. Davis is saying, especially the N and the in along with the sure. What a rhyme. Yes, it's sure to end sure. Greetings, greetings to you, Deaconess. All right, so our presenter said she's going to join me soon. So let's give her a few to do so. Not sure if she's experiencing any challenges, so I'll just um, continue to check my phone. So I don't want to jump the gun. I will allow my presenter when she gets here, when she joins us, she will she will let you know exactly what it is that she will be talking about this evening. I just have the topic. I don't really know what our discussion will be about. So we will wait. But I know it will definitely be about insurance, insure to insure. All right. So our presenter, she is now on, and she is no other person than Mrs. Nastasia Henry Williams. I will now hand over to her and allow her to do any further introduction of herself that she may wish to do so. Go ahead, Sister Nas.
Thank you. Thank you so much, Mrs. Boyd.
Um,
Wonderful. Great evening,
you're a bit
everyone.
low. Could you turn up your volume a bit?
Is that much better now?
Are you able to hear her clearly? Still a little bit low from my end.
Are you hearing me now?
I am
Still,
hearing you. I'm hearing you, but it's a bit low. So I'm asking those who are listening if they can hear you clearly.
I'm seeing where the volume is at 100%. So I'm not sure why. All right, let me turn off the camera and see.
Are you far away from your mic?
No, I'm not. Are you hearing me a little louder? I turn off the camera
It's
to
the
see.
same. All right, let me see if it's my end here. Oh, go ahead. Go ahead. Go ahead,
All
Steve.
right. So is it louder now?
Yes, it's my computer. I turned it down. I didn't
Oh, okay.
realize. Sorry.
So I just want to say good evening again, everyone. I hope
You
we
can turn
are
on back your
all
camera. Let us see your pretty face.
okay. I hope we are all feeling well and are ready for an evening of a conversational presentation. Thank you so much, Mrs. Boyd, for this opportunity. It's really a privilege to be sharing over here this evening on the Ancelena's Boyd Versatility channel. Thank you, Madam.
Pleasure is mine. Thank you.
Wonderful. Let's begin with a formal introduction, nothing too long, but just to lay it out. All right. So, my name is Nastasia Henry Williams, a licensed insurance advisor by the Jamaica Financial Services Commission. I am a $1 million roundtable qualifier and a consistent top performer for my branch and the company that I currently employed with. With that said, I believe that I am qualified to speak to us on the topic at hand. Insure to ensure. One may ask what it means to insure. My response would be to insure means to protect against risk by making regular payments to an insurance company. Another may ask, what does it mean to ensure? And my reply is, to ensure means to make certain, right? So you insure by paying regular premiums into an insurance company that will give you something for sure. But why do I need to be insured to ensure? Tonight, I want to show us that it is the easiest, the fastest, and a route that anyone can take. That is whether you are rich, poor, or in between. To ensure, to ensure. All of us are given two dates. First one is our date of birth. And this is the date we came into existence. And all of us know this date for our birth. The second date is our date of death. And
Mm.
this one, none of us know. But between these two dates is life. And life can be long and eventful. Some of these events are disability and dismemberment. Dismemberment is the loss of one or more member of the body. Two, living too long. Can you imagine living too long is an event? Old age, yes, it is. No, dying too soon, death. And this is a topic that most of us or most persons do not like to talk about, but it is very important to talk about. All right. And four, critical illness. Five, procreation. An encounter with any of these can and will put an individual or even a family at risk. And it becomes greater risk if the individual or the family is uninsured. Would you agree? May I ask that again? It puts the individual or the family at risk if the person is uninsured. Would you agree? Absolutely. Let's look at it a little closer. Now, there is this single parent household that houses four children. The single parent has a good job that pays her well. She can afford to provide for her family. However, she falls ill, critically ill, and is now unable to provide for her household. And this sickness, can I tell you, is something or is one that which could be covered on an insurance policy. And she didn't put a plan in place for this. Now that she's critically ill, her bills will still have to be paid. Her children will still need to be taken care of. And she now needs special treatment and is frequently visiting the doctor without a health card. Health insurance, my versatility family, is very important. This must be utterly depressing and stressful for her, that single parent, and her family, her household. Might I add here that there are two ways to earn an income. One, you at work, like that single parent was, and two, your money at work. You can put your money at work in an insurance portfolio. It was all good and dandy for that single parent when she or her was at work. But the minute he or she loses that power, the story changes, the family lifestyle changes, everything changes. He or she could have transferred that risk to an insurance company through the implementation of an income protection policy. Insure to ensure. One may ask, Nastasia, how much income will you provide me through your company in case I fall sick with a critical illness? The formula is 5 times your annual income. However, the final decision will based on your ability to pay. To all the parents with children, what plans have you put in place to provide the desired career path for your children or child? You can you can insure to ensure. All right? Let me commend all the parents out there who have already initiate an educational plan for their children or for their child. Kudos to you. Now, I want to ask those parents who have not yet put in place a plan, an educational plan we're speaking about now for your child or children. Would you prefer to save now and earn interest, or would you prefer when your child reaches 18 to borrow and pay interest? Let me ask that again. Would you prefer to save now and earn interest, or when the child reaches 18, you borrow and pay interest? The choice is yours. And I want to tell you that the insurance industry is there to facilitate you parents with making this decision. It's not one that is hard, and it is not one that is stressful. Can I tell you that this is a great investment because it is not that it's going to pay whatever money you'll get at when the child attain age 18. It's not that it's going to pay over to the university depending on the policy, right? It's not that it's going to pay over to the university. So if you will be the insured person, so that money will pay over to you. I can speak of a client of mine. When I signed her up, she did not want to say to put a policy in place for an educational plan for her son. What she wanted to do was to buy the son a vehicle when he reaches age 18. The decision is yours. You can invest now and earn interest, or later you borrow and pay interest. I'm not sure if there is any question at this time. If there is any, I would be happy to provide you with a response. Is there any, Mrs. Boyd?
I am not seeing any question in the chat as yet,
Okay,
so you may continue.
thank you so much.
You're welcome.
Now, for the couples who are online, or to those who may listen after, what plan do you have in place for your family, the breadwinner of the family, the one that provides for the family? If that person should pass away tomorrow, how would your financial lifestyle changes tomorrow? Would the creditor be coming at your door? Would you be able to maintain the lifestyle that this breadwinner has created for you? Would the children be able to go to that prep school, or you would have to stop them and put them into a primary, or maybe you stop them from school completely? Couples, we have to plan. We have to plan wisely. We have to take the decision to plan for the family, plan for the family financial stability, plan for future growth in the family, plan for business generation, plan to transfer wealth to your generation, plan to transfer inheritance to your children. Another one of the event that can hit us is old age. Traditionally, the retirement lifestyle is changing. Most persons do not want to retire at age 65 anymore. Persons want to retire in their late 40s, early 50s.
Yes,
But can I tell you, to do so, you have to make the decision today. You have to insure to ensure. You can choose the lifestyle that you want to live at retirement. Do you want to end up on the street begging because you did not put that 20% aside of your annual income? You have some parents that believe that children are their pension. I
yes,
want to tell you tonight that that is not so. Remove that thought from your mind. When these children reaches their adulthood, they have their life to live. They have their family to really cater for. And sometimes it so happened that the house that you work so hard to build or to buy, when you reaches pension age, when you reaches retirement age, you end up in a home and not in that house. Why? Because the children that you saw as your retirement plan, they now are living their life and do not have the time to give you the health care, to give you the care that you need at that tender age. So they see it best to put you in a home where someone else can tend to you. I am not saying that you must not invest in your children. That is important, but you have to strike a balance. You have to plan for your children and you have to plan for your retirement.
Yes.
There are options where you can do term investment. Depending on where you are and where you want to go, you have the option to choose invest for a term period, and then you will get a lump sum of money paid out to you where you can use that to initiate a business that will eventually pay you. I would consider real estate to be a good one, right? Because then and there you will be able to pass on something in your generation. You'll be able to create generation wealth. But I also want to tell you that having real estate in old age without a plan, it is also that can be a liability and not an asset. So you also need to have an estate planning in mind. You need to have a plan as to how the asset will be transferred to the next generation. I'm not sure if you have encountered or if you have seen anyone who, when somebody died, they are fight over the property because there wasn't an estate plan to transfer the property equal, distribute it, right? Or there was no will. Take the initiative, my versatility family, and plan. Insured now to ensure. Is there any question, Mrs. Boyd?
No, still no question. Come on, guys. I want to see your questions for the presenter. You may type it in the comments, the live chat area, if you have
Oh, the
any question.
oh
Or
the
maybe
camera
after
was
the presentation, they will ask their questions. I'm not sure. You are muted.
oh I just realized that the camera wasn't on. So I was putting it on and then the mute came. All right. So another thing is the disability. When we become disabled, we may and may not be able to work for a period of time, right? What plans do we have in place to cushion us throughout that period? We do have personal accident insurance that you can put in place to cushion you through that period. We have the dismemberment benefit. So if you meet in an accident and you lose a body part, you can reap living benefit from that policy. Disability and dismemberment can put you also in a position where you're permanently unable to work again. The bills will still have to be paid. Mr. JPS will still be knocking at your door. NWC will still be knocking at your door. And the creditors, if you are someone who doesn't buy, you buy an higher purchase, the creditors will still be coming. What are you going to do? What plans do you have in place to cushion you for a disability or dismemberment? When you're young, you may not see the need for it. But I want to tell you that when you're young, it's cheaper for you to be insured. You could consider you're much healthier as well. So it is easier for you to pass a medical if it is that is a medical policy that you're gonna get on. If you're depending on your size, if you're overweight, it's hard for you to get a good policy. So it's best for you to start early, right? And if you do have pre-existing condition like hypertension and diabetic, these will limit the amount of coverage that you can get and the amount of and the type of policy that you can get as well. If it is that you need to buy a real estate, you didn't buy it in your younger age, but then in your latter days you want to purchase real estate, you will need to have coverage on your life equivalent to the value of that property. And it could easily well be that at that age, you're unable to acquire that amount of coverage because of sickness. None of us know when sickness will come at us.
Question, Mrs. Henry Williams, as you mentioned about age being a factor as it relates to insurance policy, what is the age limit or the cutoff point where you can acquire an insurance policy?
All right, great question, Mrs. Boyd. All right, so the cutoff age, it depends on the company. One of the print,
Okay,
one of the companies, the dominant company in Jamaica, one cutoff period, I believe, is 75, and another is 76. So
okay,
persons can be insured from age 0 to 76 or 75.
okay, okay. Thank you.
You're most welcome. No
You go
questions
ahead.
from the chat?
No, I'm not seeing anything in the chat as yet.
Um, basically, that's it. To insure, there are different types of insurance. So you have life insurance that deals with life, the individual. You have general insurance that deals with the car. So you insure to insure.
Insure, yes.
I am not a certified general insurance advisor, but I know that I do drive and I have insurance on my vehicle. You need to ensure that your vehicle is insured so that should in case you're meeting an accident and you're at fault, then the company would take up that risk and pay over that money to the person who vehicle you hit. If you don't have any insurance, the ball is in your court to fix your vehicle as well as to fix the other party vehicle. So it's very important to have general insurance as well. I
Yes.
have mentioned health insurance. Health insurance is another aspect. Everyone needs health insurance. Um, I remember I have a client, a lawyer. He's young. He's 35 thereabout. Um, didn't have any health insurance. He did a surgery that caused him the cost of the surgery was 300 and something thousand, right? And he decided to get some insurance, some health insurance now. At that he wasn't healthy. He had diabetes as well. So it was he did not pass the medical because it was bad. And the fact that he now in need of regular treatment and all of that, they consider him to be high risk.
Mm-hmm.
So it is ideal for persons to have it before you need it, because when you
Yes.
need it you may not be able to get it.
Mm-hmm.
For me personally, no. I remember I have my health insurance, personal health insurance from my job. My husband, I also have health insurance from my husband. I contributed a small percentage to the one at my workplace. So I was saying, all right, I'm going to just cut that one and just invest that money somewhere else. And I said it to my manager, and he said to me, no, Nastasia, no. Don't put in that one, keep it. Because there
Yes.
will come a time when you need it. And I remember these glasses that you're seeing on my face now. I remember when I was looking about it just the other day, I could have used the two health card to cover the cost for
Yes.
for the glasses. So you will find need for it. And
Yes.
you want to be able to you don't want to be able to to in the position where you need it and you cannot get it because of some underlying illness, right? Another The general insurance also covers house, right? Your
Mm-hmm.
house and all
Property.
that. So yes, so the property covers the property insurance. So you pay for your house, the content and all that is in, that is on the general as well. All right.
So in
So
case of fire and
what?
fire or flood or
Yes,
hurricane or anything of the sort, then you know that you have coverage somehow to repair the damage,
that's
right?
right. That's
Okay.
right. And
Okay.
also the content as well. They cover certain content inside of the house.
Oh, okay.
Yes. So
Okay.
in case of theft and all of that, then you're covered.
Mm-hmm. 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 Okay. All right. My people, do we have any question for the presenter this evening? You may go ahead and type it in the chat. Or if you want to join me on the platform to ask the voice it,
Sure.
you may do so also. I will share the link. Let me share the link. So if it is that you want to join us here and ask your question, no problem. You may go ahead. Anything that wasn't clear to you, you may ask for clarification. Any additional information that you may seek, you may go ahead and ask also.
Right, right.
So we are waiting. So while we wait, I want to say thank you very much, Mrs. Henry Williams, for coming on and doing such a profound presentation. You have touched on policies such as the critical illness, and that would cover like cases like cancer,
Cancer, strokes, heart
stroke.
attack,
Mm-hmm.
blindness, loss of speech, multisclerosis, coma, major organ transplant,
Mm-hmm.
kidney failure, stuff like those.
Okay. Okay.
And for persons who work in the healthcare, it
Mm-hmm.
also covers occupational HIV. So if you're on
So
the
if you
job,
contract, okay,
HIV on the job,
on the job, okay, so the critical illness would also cover that as well. All
that's
right.
right.
And you mentioned the educator plan,
Yes,
which is also very, very, very important for us as parents. Because, truth be told, many of us growing up on here, we did not have the access to all of these things. Our parents didn't really put these things in place. So we have to go and borrow the student loan, or we have to go to the bank and borrow loan in order to pay our tuition. But no, we are being educated. So we
right.
know that we have the chance, we have the opportunity to go out there. We have so many insurance company that are out there now that we can go and just open up, take out a plan for our child or our children. And you said it starts from what age? What? 0,
0.
right?
That's
From age 0. So, and we have, as it relates to the educator plan, we have different payment plan or something like that where you can pay different amount on a monthly basis. So
that,
it's not a fixed cost, right?
not a fixed cost.
So
It
you pay
depends
as how
on where.
you earn.
That's right.
You can
Everybody
pay as
can
how, right. So you can
afford.
pay as how you earn. So I think that one is very important. Not saying that is important than the critical illness, but as parents, we need to set the foundation, as you said, for our children, ensure that they have access to good education. You
Yes.
also mentioned about the dismemberment and the disability. So suppose I lose one finger, that will
Yes.
cover in the dismemberment or the disability plan.
You have accidental and dismemberment. The accident policy does cover that. So it depends on
Okay.
the type of finger. So they have like the index finger. You get a percentage based on that one. You have
Mm.
another finger, therefore, and so
Also,
forth.
different percentage based on different things.
Depending on how it is used and all of that. Because some
Okay.
of the fingers are more effective than some.
Okay. Okay.
I
I
would
didn't know that
say.
at all.
Yes, but there is
Okay.
a percentage based on the loss, whichever
Yes.
one is lost.
Okay. I am not seeing any questions. Are we afraid to ask questions, guys? I know persons are on.
Okay.
Any
And
questions?
I want to give away a prize tonight,
All right. So come on,
Yes.
guys. Come on.
We
Ask
have
your
a gift
question, man.
certificate for somebody for divine health. I
Oh
want to
my
give away
God.
a gift
Come on,
certificate
guys.
for
This is
divine
yours. This
health.
is you we were talking today. Certificate for divine health. Come on, guys. Any questions? Mrs. Anderson? I don't know who else is on. Mr. Boyd, are you on? Yeah, my feeling face of food. You want to hear a question? Do you have any question as it relates to the topic insure to ensure?
Right.
And you also mentioned about the general insurance, the car, as it relates to car. You are in an accident. Mrs. Davis, no question for her. So
Everything is
everything
clear.
was clear. You have no question as it relates to insurance. All right. Okay. Anybody else?
The thing
Because
about it,
sometimes, go
no,
ahead.
go
Go
ahead.
ahead.
You can go ahead. Go ahead,
No, I
Mrs.
was
Boyd.
going to talk about the vehicle because sometimes you're driving your vehicle. Some persons driving their vehicle. You met in an accident with them. You have insurance. However, they are in the wrong, but they don't have any insurance. So what will happen? Will your insurance cover your damage?
All right.
The one with the insurance.
So I am not a
Oh,
licensed general,
okay.
but
Yes.
I can say based on experience, I would say
Yes.
that the person would have to take up total responsibility. He would have to cover his vehicle as well as the other individual vehicle
Yeah, the
to
individuals.
fix to fix the
Okay.
vehicle.
Okay.
Because
Welcome,
if
Sister
you if you're in
Marcia.
the right if you're
If
in
you're
the
in the
right
right,
Yes, if you're in the right and then you're going to use your insurance to cover it, your premium is going to go up. So you wouldn't want
oh,
to, because you're going to pay more in the future.
you're gonna
So
pay more insurance.
you want to protect that as well.
Okay. Welcome, Sister Marcia. I'm not sure if you heard the presentation. Do you have any question? We're talking about insurance, insure to ensure. So it's basically saying take out an insurance policy. It is important for you to take out an insurance policy. Not only take out the policy, but it's also important, Mrs. Henry Williams, to make your regular payment. Because if you're not making
Right.
your regular payment, when it is time and you need a payout, so eventualities do happen. So whether
Yeah,
it be sickness, whether it be an accident, dismemberment, and whatever it is, if you are not regular paying up for your policy, when that time comes, they won't be able to pay anything over to you, right?
that's right.
So you have to also make regular payment, and it is to what? Ensure that you have it before you
Need
need
it.
it. You
But
need it.
some persons may think that it is really strict. You have they give you leeways. So should in case
Yes.
you come upon hardship, there is time where there are months, like 3 months or 4 months, that you can go without making payment, and the
Yeah.
policy still remains in force, right?
Okay.
So it
Okay.
doesn't just lapse on a one payment, on a one no payment. They give you a
Okay.
grace period that
Grace
cushion you.
period. Okay.
Yes, that cushion you so that when you bounce back, you still have your plan in
Mm-hmm.
place and it can do whatever for you just the same.
Okay. Okay. All right. I see others joining. Welcome. This evening we are talking about insurance. Insure to ensure. If you have any question for our presenter, you may just post it in the comment in the live chat. So I see from Sasha Blair, she's saying, all right, so as was said before, Sasha, she's not a general insurance, she's not a certified general insurance personnel. However, she can speak based on her experience. What is the difference between, her question is, what is the difference between third party insurance and comprehensive insurance? Can you speak to
All
that?
right. All right. So third party, third the difference between, and I'm speaking based on experience or general knowledge, not from the a general, not as a general insurance advisor. So the third party insurance is the, the difference between the third party and the comprehensive insurance is
Your mic is muted. Your mic is muted. She's not hearing me. I think it's her internet. Your mic, yes. All right, just give her a minute, guys. Maybe your internet is acting up like mine right now. Your mic is muted. Hearing me?
Hello. Oh,
Yes, you're unmuted. So you may go ahead now.
Oh, you weren't hearing me.
no.
Sister.
No, I was telling that your mic was muted. You were explaining about the third party and the comprehensive, and your mic just went. So we didn't really hear anything.
Oh, okay. Sorry about that. All right. So, as I was saying, I think you heard this part. As I was saying, I am not a licensed general insurance advisor, but
Yeah.
based on experience, I could speak to it. So the difference between the general, the comprehensive, and the third party insurance, I would say, is the benefit basically. The comprehensive insurance give you more benefits. You have more. You're covered for more benefits in terms of like because you eventually you pay more premium, you pay higher premium, so you have more benefits on the covering on the comprehensive
Yeah.
insurance. Some of the benefits is like I think you're entitled to like a windscreen on the comprehensive like every year, should in case you get a damaged windscreen. Whereas on the third party, you're not entitled to a windscreen. You'd have to cover that cost from yourself by
Okay.
yourself.
Okay. And in the case, I think from probably just knowledge or just hearing on the way, because I'm not a driver, I don't know anything about driving. I think I heard that with the comprehensive, it also insure like other persons that, for instance, you met in an accident, then those persons who are in the vehicle with you, they would be covered as well. Mr. Boyd, you can speak to that. If you know any or something to the
I,
effect, or you can insure a second person to drive your vehicle or something to
well,
that effect.
I think they insure the other person. That would be like PV,
Taxis.
PB,
Yes.
yeah, PV,
The
PV.
PV, okay,
Yes,
okay. So
but
not the
not the comprehensive than the third party. The comprehensive and the third party is third party. You can drive. You can have persons who can drive. It can be an open thing, right?
okay
So
for the
on a
third
third
party.
party,
Okay,
it can be open where somebody else can drive as well.
okay.
Yes.
All
No.
right. I hope that answered your question, Sasha Blair. Thank you.
Um,
Anybody else? Any more life insurance question? Health
Yes.
insurance question?
Yes. Come with those questions.
Yes. Mr. Boyd, do you have any question?
yes, I have a question.
Okay.
Good evening, everyone. I was
Good
not
evening, Mr. Boyd.
at privy to the presentation that went forth earlier. So maybe the question that I asked, you might have said something about it.
It's
No,
okay.
no, I remember I had a plan and it lapsed, right?
Okay. Okay.
Um, if the plan lapsed, right, how easy would it be to restart that lapsed plan, even after maybe a year?
Okay. All right. Great question, Mr. Boyd. All right. So it depends on the type of policies. If there is not a reinstatement drive, depending on the type of policy, that policy may not be able to reinstate it. If it is a coupon policy, coupon mean or a non-medical policy, that mean you didn't answer, you didn't disclose anything about your health, you did not do a medical or anything like that, then those type of policies, the reinstated period for those policies are normally 6 months. So you can reinstate those policies within a 6 months window, right?
Okay,
However, if the policy is a medical policy, you have up to 2 years that you can reinstate those policies, right? Let me go back to the non-med. The non-medical policies, if it is a policy that doesn't have equity on it, meaning investment, most of those policies are redate. So sometimes you can just pay 2 months premium or 3 months premium, and those policies are back in force. But if it is a policy that has equity, that is investment, then you would
Yeah.
have to pay up all of the outstanding premium plus the investment portion. Some policies facilitate you writing to request that you want to pay the minimum investment. Because suppose the minimum investment on the policy is like $500, but when you took out the policy, you were investing 5,000 in the investment account, right?
Yeah.
You can decide to say you can write to the company asking them for the opportunity to reinstate at the minimum investment cost. So you would pay the minimum investment cost for the period that you have not been paying, plus whatever the risk premium is,
Okay.
right?
That answer your question, Mr. Boyd?
Yes. Yes. And also with
And
um,
not hearing you, Mr. Boyd.
Not hearing
Also,
you. Maybe you need to take out your speaking the phone or something. Not hearing you.
also to add, sister, Mrs. Boyd,
Yes.
if the policy you're trying to reinstate it is a medical policy, you may you may need to do a medical to put it back in force, because
Okay.
your health status may have changed, and
Oh.
yes, so
And
you
so
may
you
have,
might not be able to qualify then
that's
to
right.
reinstate that policy,
So they may
Mr.
so that,
reject the case.
that would be the next question I would ask. Um, because I tried to sign up for a
You're a
policy.
bit clouded, Mr. Boyd. We cannot hear you clearly.
Maybe it's something. So,
Something is wrong with your microphone.
and I'm not.
All right. So while you get that sorted out, there's two questions from Sasha Blair. The first
Okay.
one: how do I buy life insurance?
All right. So great question, Sasha. All right. So
Sash Blair.
Sash Blair. All
Yes.
right. So life insurance. How do you buy life insurance? The best way to basically buy life insurance is to buy to cover a need. So you meet with an insurance advisor, and the insurance advisor will do a fact finding, get to know you, get to know where you are, where you want to go, and then it is that person's responsibility to put plan in place to suit that needs. If you do buy on a need basis, then you will keep that policy because you know the reason why you have bought it, right? So I hope that answered the question. Or is it that you want to know how do you go about if you go into a company or that? So you
You could
should buy.
also share on that. So you could also share on that for her as well, Mrs.
Okay.
Williams.
So the
Yes.
first thing to do is to buy life insurance based on your needs, because you don't want to buy life insurance. Because I remember when I bought my first policy, I don't know what I bought. I know the person and I just buy it. Right?
Yes.
So I don't know nothing about the policy, but it is always best to buy on a needs basis. So if it is that you're going to buy a house, you said in the next 5 years, I want to buy a house in Mandeville. Best thing to do is to look at the market, look at the value of the house, current value of the house now, and then you would say, all right, the value of it is 33 million. It is going to be that I am going to need at least 10% as a deposit, right? You're going to also need some closing costs. So you need to say, I'm going to buy a policy. The policy must give you that equivalent coverage. So you need to ensure that you have 33 million if you're going to use it for mortgage, right?
Okay.
33 million. You can mix it between term and whole life. Whole life
Oh,
is always cheaper. So depending on your age, if you're gonna take out the mortgage, say for 30 years, you can buy a 30 years term policy, right? And use that. Then now you can save the deposit into in a savings on a policy, right? That 33 million. So you're gonna need 3.3 million in cash for the deposit, right? So you save that on an insurance policy, as well as you have the coverage that you're going to need, because if you wait 5 years time, your age is going to change and the cost to acquire it at that time is going to be higher than it is now, right? So you buy based on your needs.
Okay, she's saying okay, thank you. Yes, I know age has a lot to do with buying insurance. Our second question is, what's the difference between term and permanent life insurance? Term
On the
and permanent life insurance.
go again, Mrs. Boyd. You break up the last part.
Oh, my internet, sorry. It says, what's the difference between term and permanent life insurance?
Okay, permanent. So permanent is basically whole life. So the difference between term insurance is for a specific period. So it is for like 5 years, 10 years, 15 years, 20 years, 30 years. That is term. And term insurance is often cheaper, right? And not only is it cheaper, um, it only gives coverage. So there's no investment. You can have accidental and dismemberment, but there's no savings on it. So if you decide to surrender it, there is nothing that you will really get from it, right?
Oh,
However, it depends on your condition. Let's say you have a lot doing now and you need to have coverage. You can start out with term, and most terms can be converted to a whole life, right? So within 3 years or 5 years, you can convert that term if it is that you need it for whole life. But if it is a mortgage, you can just use it for that specific term. But the thing about it is when that term's finish, the insurance is done if you haven't convert it. And if the term finish and you haven't renew it or convert it, and you die outside of that term, there is nothing that you will get,
wow.
right? And then the
Wow,
whole
that
life,
is serious.
yes. So that is why sometimes you will hear people say that insurance a thief and all of that. I agree because it depends on the type of policy. So you may bought a term and the term ends, or you didn't convert it or you didn't renew it, or you buy a term and you think you have critical illness but there's no critical illness on it, and you are diagnosed with a critical illness now, and you come in or you call on your agent and they're telling you that you cannot get any benefit from it, right? Then because you didn't have the policy. Now the whole life insurance runs, as the name suggests, for whole life, for your whole life. The premiums that you pay on a whole life policy is consistent throughout your lifetime. The premiums that you pay on the term policy will be, there will be a little up up to it, because let's say you started with a 5 years term. When it reaches 5 years and it's time for that policy to be converted, it's going to be converted at your new age. So the premium is going to be a little bit more, right?
Okay. All right. So she's saying that she was seeking advice on insurance, but the person from Advantage, they wanted her to do both. So both meaning the term and the permanent, but it wasn't making sense to her. So she said none of what they explained to me when asked, none of that was. So what you're saying, she's saying that none of that was explained to her when she asked. So she's happy that she didn't do it. Thank you for clarification. Said she appreciate it. So in your
Just
explanation, go ahead,
just
go
to
ahead,
add
Hassan.
to Sasha question. Sometimes it depends on where you want to get, Sasha, because as you speak about Avance,
Yes.
Avance, more than like you're thinking about property mortgage.
Yeah.
So it is ideal to
Oh,
do both.
advantage.
Yeah,
Mm-hmm.
it is ideal to do both because it will be work out cheaper for you. If you're gonna do whole life
Yeah.
would be expensive. So you can start off with term and whole life. And we normally do it like that, mix it for mortgage. If persons
Okay.
have been challenged to afford based on their affordability. So nothing is really wrong with having both.
So, Mrs. Henry Williams, from your explanation and our discussion this evening, well, just know I'm realizing that in order it is good to purchase insurance, but it is also important when you're going to purchase your insurance that you seek the necessary information before you
Yeah.
purchase. You have to know your need and know
Yeah.
what is it exactly that you want from your insurance before you go ahead and purchase. So one another
Um,
question or something that I want you to explain, just hold a bit, Mr. Boyd. It's about surrendering your insurance. Could you just
Okay.
elaborate a little bit more on surrendering your insurance?
All right. So surrendering can come with a cost. All right. Say for instance, you took out a policy like Sasha. She took out, say for instance, she had gone ahead and took out the term and the whole life with Avon. And she realized that the term don't make sense to me. I am going to surrender it. Surrendering comes with a cost. It depends on where the policy are, and the percentage varies based on where the policies are. So they
Yeah.
would they would surrender it at a cash value. So the sooner you surrender it, the more you pay.
Oh,
Yes, the more is deducted. The longer you keep it, the less is and I cannot give you like a figure because each policy may have different rates at which they surrender the policies. But
okay.
one thing is the sooner you surrender the policy, the more they will deduct from whatever you have paid in.
Okay. All right. Thank you for that. Mr.
But
Boyd,
you
you
can
may go
see
ahead.
that's the point.
um, I was gonna add also that it is good to have a good relationship with whoever is managing your policy.
Your insurance
Um,
advisor. Mhm.
yes, because I had a policy with an advisor, but for some reason the advisor I only used to see her like maybe one time for the year, sometimes maybe two times for the year, and most times you have questions, that you'd want um to communicate. When you try to get her, you usually get like an assistant, right?
Okay.
Mm.
Um, how do you go around that? Like, can you get someone else assigned to the policy, or I wouldn't want somebody to lose their job, but how do you um
Treat a situation like that.
yes, treat that type of situation, because you want to communicate with the person, you want to know what's happening with the policy, because sometimes people really don't just know, they're just paying over the money, and they don't really know what's being
Yes.
done with the money, and sometimes I said I have had bad experiences. I've seen people who have bad experience with these advisors, and I'm one of them that is a bit testy around advisors. I have to have a good relationship with you. It's me just me go fall out of trust, and then me go just say, oh, all right, go on with that. That type of vibe. So how the question is, how do I um fix that relationship thing, and if I have an advisor that is not um helping me with my needs, do I speak to somebody higher, or that's my question really.
Okay. All right. So at the initial stage or throughout, the advisor should state that it is her or his responsibility to communicate with you either every quarter, semi annually, or every year. Most do it on a yearly basis. They do a yearly review, right? So they do a yearly review of your portfolio. But if that is not done, right, and you're unable to communicate with your advisor, you could, there are procedures that you can follow to change agent, right? But if you're gonna do that, yeah, because I can come to you. You have an agent, and I come to you and you say that I haven't heard from my agent within different companies have different time frame. So if it is that it's I haven't heard from my agent in one company would say 6 months, then another advisor can take on the responsibility as the new advisor to you, the client. Um, or you can write to say that I want so and so to now be my advisor because XYZ, and the company will act on your request.
Okay.
Okay.
That
Okay,
answer your
good.
question, Mr. Boyd?
Yes, I'm sure there are a lot of I'm sure there's a lot of persons out there that doing that, going through that similar. As I said, I know of persons who have gone through similar experiences, and I myself I've gone through some. I've gone through closing an investment account, like two of them, and that and realize how much is pulled out from my money, you know, because I closed it before the, what you call it, yeah, you know. Um, so out there, it's a tough world. Sometimes it is good when you have somebody like a whole financial advisor that manages all of your money, because it it streamlines all of your, and I think that's how it streamlines all of your business, all of your savings, because that I think that's how the quote unquote rich people stay on top of how their money is run. You understand? Because they have financial advisors that run through everything, from even paying light bill um straight down to sending the kids to school,
Mhm.
right? And I think if we try to communicate better with our advisors, um, their information will help us to manage our money better. Um, hopefully I'll reach that stage. I'm not there as yet. I have to trust but the advisors. As I said, I've been to more than one time, and it has not been pretty for me. So I have a lot of bad experiences.
So Sasha is saying here, some advisors have no clue as to what they are doing and lead people astray. And that is true. We can give, yeah, we can give that. That is true. So when you're in insurance too, you have to know what you are about, because you're managing, as Mr. Boyd said, you're managing people money, people's
Yeah,
life, savings. Sometimes it's not really have you have it, Mrs. Henry Williams, why you take out an insurance policy, but it's making the sacrifice because
that's
you know
correct.
how important it is. So you need competent persons to
Right, right,
manage and to advise you about your policy.
right.
Mrs. Boyd, Mrs. Boyd,
Yes.
you know what happened to one of my advisor? The advisor got a promotion, and then the case was sent over to somebody else. And I'm sitting there like, even
it's
though the
both of
person
us.
got a promotion,
That,
who
that
I'm come,
and
who, who,
that advisor, even though he got promoted, Mr. Boyd, but I can speak to. I'm not gonna call his name, but he was
Mm,
a very, 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 very good advisor.
mm,
If
yeah,
you're talking
very
about
good,
Mr. X, he
very
was a
good.
very, very,
Yes,
very good advisor. He was
but who
always
they put it over
present.
to? I was annoyed, man. Jesus.
Yeah,
yeah, I had similar situation with my very first policy. The
yeah.
policy even lapsed because it was on a payment system, and every time I get message to say that the money is not going over, the money not going over, and I went in and I make payment, and the person left, and I got a new advisor. That person did not relate anything to me at all, and the
Hmm.
policy lapsed, and I did not know anything. So it
Yeah.
does happen. And as you said, Mr. Boyd, we really need to have good relationship. And not
Hmm.
only have, we need to maintain good relationships because it
Yeah.
is
Yes,
crucial for this business. We need to be in touch with the family. We need to be in touch with what is happening with the family. We need to know when there is changes in the family, if there is a new
exactly.
birth, if there is death, if there is anything, we are supposed to
That
be there
and
because
that is and that is the way I know it works. So when
yeah,
I'm not getting that now, I my trust level is is so at a low. Once I'm not getting those response, I just withdraw. I say, oh, all right, me that put in 5 grand a month or whatever, go on with it because I am not gonna go down that road again.
mm.
You understand?
So what are you saying, Mr. Boy? You're saying that because the person is not communicating with you as the way how the previous advisor was doing, you're withdrawing in your payment or
No
stuff
man,
like
I no, I'm doing the payments, but then there's no communication, and as you said, the lapsed. I'm just getting messages that it had lapsed when I call, or them not get the money yet, or some argument like that. So me I say, who am I
Yeah.
paying? Who am
yeah.
I paying the money to? If because the money is leaving my account, so how, how the money not come? How none of it basically, you know? Um, so when it got there, I just stepped back. I was like, all right, I can't do this. This feel like I'm giving away my money and I don't know how it's going to work out. Hmm.
Oh, so
So you just
you're restricting your benefit because of the delinquent of somebody's action. You
yes,
can't really do that. You have to take it means as if you put responsibility in somebody hand who is not responsible enough. So what
right.
you need to do is to take complete responsibility of it. And you can do that because you can set up a system. Um, whether it you said it's coming from your bank account, you
Yes,
said the
so
money is coming from your bank.
it would pay over
Like
monthly.
deduction. Hmm.
Yes, deductions. Yes,
There is,
deductions from the
may I add, there is a particular financial institution. As an insurance advisor, I do not like to use them because they withdraw the money and the money is not coming over on time. The money doesn't come over until personal policy will lapse and the money don't come over, right?
Oh,
So there is a specific institution, financial institution that really does that. And I refuse to work with them because I do not want to my client to be paying and the money not coming over and their policy is in jeopardy because of the delinquent payment of the institution. So I
okay.
refuse
So
to use
sometimes
them
it
for
can
that.
be the fault can be on the bank.
That's right.
Oh, can be on the
That's right.
bank.
And
Because
if
I
it's
was
okay.
thinking that when it's paid over, it's probably posted to your account by your insurance company late or something. That's what I
Exactly.
was thinking. So I was thinking that the problem would be on their part.
No, sometimes it does come over late. And even if it is salary deduction, some salary
Mm-hmm.
reduction company pays over late, but there is a track record of it. So they will know that this company is 4 or 5 months behind, and that will prevent the policy from lapsing. But when it comes on to the POP or the standing orders in the bank,
Mm-hmm.
it has to do with the bank itself.
Oh
Okay.
Or,
boy.
or if the client has money in there, because sometimes the insurance company send for the money and there is no money in the account. So you get a message to say insufficient fund, and every time you get that insufficient fund, there are some deduction from your bank account. You have to pay some money for that. All right. And if it is on a pop and there is two consecutive no insufficient fund, then the pop will automatically stop. So you would need to redo that pop for the company, for the bank and the insurance company to continue do business on your behalf.
Okay.
So relationship
That
again
that is
is
a that is that is a big that's big information right there.
yeah, brilliant.
So and basically, Mrs. Williams, all that you have said tonight has always come back to that as the relationship that
Right.
you and your advisor have must be one of fluent communication, and regular communication, you know,
Yeah.
that that will be able to do exactly what we plan out to do. You get paid and we get our benefits,
Right.
Yes.
right? Yeah, man. Thank you very much. I feel happy. Maybe I can look for you.
You're most welcome, Mr. Boyd. You're
All
most
right.
welcome.
Do we have any more question? Any more question? Type your question, final questions in the comment area as we wrap up this evening's presentation and the discussion. It was indeed a very good discussion and presentation this evening. I am educated. I have learned a lot this evening from you,
Wonderful.
Mrs. Inner Williams, and I want to say again many thanks to you for coming on this evening and sharing with us. It is greatly appreciated. So, I would like your final words as we wrap up this evening based on a statement that you made. Uninsured persons put their family at risk. So, when you're
Oh God.
uninsured, you
I
put
may have
your
daughter,
family you put
Mhm.
your family at risk.
and
So
wife.
Sasha is
So,
also saying, great session and thank you for the product knowledge. Very informative. Yes, it
yeah,
was
man.
indeed a
Very, very, very informative.
session. So you may go ahead now, Mrs. Henry Williams.
All right. So before I give my final say tonight,
Yes,
without a doubt, as I said before, I want to give a gift certificate
yes.
from the Divine Health, and that will be given to Sasha.
All right.
Hey,
Sasha.
Sasha, big up yourself.
So, Sasha, you will be receiving a gift certificate from Divine Health, courtesy of Mrs. Nastasia Henry Williams. All
And
right.
thank you for the support.
You're most welcome.
Yes.
All right. So back to that point, Mrs. Boyd.
Sasha is dancing.
I would too. Thank you, Sasha, for making this presentation an interactive one. All
Yes.
right.
Yes.
So, as I said, uninsured persons really and truly put their family at risk. How is this so? If you're in as Mr. Boy, I'm just gonna use Mr. Boyd's example.
Yeah, man.
You're
Use me.
married. You're married, and you have a wife. Your wife is working and you are working, and things are going good. But what if one of the party, and the party that I'm speaking of is the higher breadwinner, the one that is providing more for the family.
Yes.
In my first example, I have used sickness. I am going to go to the extreme now,
Yeah.
and I'm going to speak about death. If the breadwinner should die tonight, what will be the lifestyle for your family tomorrow? How would they live? How will they be provided for? What would they eat? What would they wear? And where would they live? It could be that you're living in a rented house. The breadwinner is no more. The rent cannot be paid. The landlord is going to come and knock at that door. What is she going to tell the landlord? My husband has passed. Where's your daughter going to live? Can she continue to attend the school that she currently attends? Will she have to be withdrawn from that school because of financial constraint? You're no more. Ah, it's not an easy one. It's a devastating one. What would you want to leave behind for your child? Wouldn't it be good if your daughter could say 10 years, 15 years, or even 5 years, I have this business, I am expanding this business because of the inheritance that my dad had put in place. You may not be able currently to be able to give your child $30 million in coverage, 50 million in coverage, or even 100 million. You did not receive that from your parents. If any has passed, wouldn't it be good if you could lay that, put that in place for your child? I cannot afford it now, but I can pay little by little to ensure that my name lives on. What legacy do you want to leave behind? What legacy do you want to leave behind? Where do you want your name to be listed? The ball is in your court. And in
Yes.
order to do so, you need to make a decision right now. Tonight, I was driving down from Kingston and I was thinking, and I said to myself, knowing myself, I know that if my husband should pass tomorrow, I am not going to stay at this house. I have to go somewhere else because of how emotional I am. What will he leave for me? And it's not a one-way street, it's a two-way if you're married.
Yes.
What will you leave for your husband? And let me tell you something, insurance is an asset, it's not a liability. You, as a living benefit to you, there is so much that you can do with a life insurance policy. as a living benefit. Think about it. Who do you love? Who do you want to protect? Is it you? There are living benefits there for you. Is it your children? There are benefits there for your children. Is it your family? Is it your mother? Is it your father? Is it your wife? Take the risk from yourself and put it in the hands of an insurance company. As I said in my presentation, there is two ways of earning an income. One, you at work, and two, your money at work. Currently, you're in good health. You're in, I'm not sure of your financial standing, but it would seem as if you are working, you're in a financial standing where you can afford to ensure. Make the decision today. I've seen I've seen persons who make this decision late and wish they had started a long time ago. They have received, but the little that they have received, they wanted more. I can tell you that a wife do not know the benefit of life insurance, but a widow does.
Mhm.
A wife do not know the benefit of a insurance policy, but a widow does. Take heed. Insure to ensure. Thank you all. Have a blessed evening.
And thank you.
You're
This
most welcome.
evening, I
Boy,
am going to close off with the words of our presenter with a
boy,
question.
just
Which
want
do
to
you,
say,
hold
Miss
on, Mr.
Boy.
Boyd, which do you prefer? Is it to insure now and earn interest, to secure, to ensure? Or is it that you want to borrow later and pay interest? Put yourself in debt. So the choice is
Oh,
yours this evening, to insure now and let your money work for you, or borrow later and pay back
In
interest and be in distress. Insure to ensure.
I like that.
Yes,
Nice.
Mr. Boyd.
yeah, I was just saying, I feel like an insurance sinner, a while ago, I was being preached to, and
Yes.
well done, Madam Williams, and I hope you continue to on this level. We want to have person insurance advisors like yourself who have the interest of those who you are assisting out there.
Yes.
As I said, I have gone through some of the bad roads. It to what you're saying tonight. It is the powerful in such a way that I understand that you know there are persons like yourself who are there who are pushing the envelope to make sure that persons out there are insured properly, right? Yeah, man.
Right,
Blessing.
right, right. Thank you, sir. Boyd.
All right, guys. So they said all good things have to come to an end. Yes, indeed. The great discussion will now have to come to an end. I look forward to seeing you all again next week. I am not sure what next week's topic will be on or who our presenter will be, but I am hoping that it will be as interesting, informative, and as interactive as this one was this evening. Have a blessed night, everybody.
Can she
Thank
give
you
out her
all
number,
for
Mrs. White,
joining. Thank you. No, I don't. No, I don't
for
think
a job
Okay.
wise?
you could
Yeah,
give
man,
out
no
the number.
problem.
Okay. So thank you all for joining the presentation. Your presence, it was greatly appreciated here. So you would like to give out your business number, Mrs.
Sure,
Henry
no.
Williams? Okay.
Thank you.
Want to go
So,
ahead? I could type it in the chat.
okay, so my number is 876 334 0524
5 2
4.
five
So
two
that's
four. Let
eight
me see if
seven
I have
six
everything.
334 0524.
Okay, 0524. All right, so you, Sash Blair, anyone else, if you want to get in touch for some insurance to insure, yes, you may contact Mrs. Henry Williams. Have a blessed one, guys. Bye bye. See you.
Thank you.
And see
Bye
you
bye.
on Saturday for games night, guys. Don't forget about games
Yes.
night this Saturday at 8:30 p.m. I miss
Oh,
you all last week. Yes.
yes.
All right. Bye bye.
All
Blessings,
right.
everyone.
Bye bye.
Bye bye.